Okay, it's Adil bringing you a review of the European markets from an intermarket analysis perspective. Okay, starting from Monday, 3rd of November 2014. Okay, so my previous video I've already explained with regards to QE Blitz. Okay, that basically remains a theme. Okay, even though German retail sales were weaker on Friday, look at that as an example. German retail sales minus 3.2%, I think they were, and basically the market totally ignored that. And as you can see, the German DAX has gapped higher and continued to move higher into the close. So basically, what does that tell you? Can you see that? Moves higher to the close. So what does that tell you? That tells you basically Kool-Aid is taking over. Okay, that remains the main theme. Okay, so it's all about Kool-Aid. Kool-Aid will propel this market and continue to propel this market higher. Weak economic data is totally irrelevant to this market. Why? Because central banks dictate and they can shift price any direction they want. Okay, this is why technical analysis does become obsolete from my perspective when central banks are involved, when you have exogenous variable shocks such as geopolitics, etc., etc. So it's very, very important to amalgamate technical and fundamentals together. And obviously, if you use intermarket analysis, then that certainly adds an additional filter in order to avoid making any further mistakes. Obviously, increases your accuracy level and obviously filters out the noise. Okay, any additional filters that you can have to filter out the noise in the market, which obviously, as we all know, is already too much as a trader. Okay, so you can look at economic news events, you can look at the best way of describing it is exogenous variable shocks. Okay, so basically the recurring theme is central banks dictate the market. The QE blitz from Japan by increasing the pension fund purchasing external, or should we say assets on the international global markets has increased to 25%. Okay, so more or less doubled. Okay, so that obviously will propel global markets higher, and obviously adding the fact that you've got an 80 trillion increase in QE. So basically, it's the Kool-Aid that's been increased, and that was a shock to the system, especially with US tapering. Can you see how it was all coordinated? And that explains why the markets continue to propel higher going into the last taper, because they already had information with regards to the Japanese QE blitz. Okay, so it's all inside information. It's all sent out via the private email, or I mean, if you, those of you that aren't convinced or don't believe that basically the stock markets are rigged, then you really are living on cuckoo land, and you really need to go and educate yourself and enlighten yourself. From my perspective, it's so blatantly obvious. It's I mean, obviously it becomes obvious. I mean, those two words alone are problematic. Obviously obvious after the event. Okay, so hindsight itself is always easy, foresight is hard. Okay, so and that's what makes us a trader. If we are wrong, we have our stop losses in place. I mean, for example, myself last week I ended up with minus 180 points. I didn't see the rally coming. Okay, I didn't expect the rally coming because everything I've been taught in my economics degree was indicating to me that this market wants to go low. You had Ebola concerns in the background, you had global growth concerns in the background, you had ISIS, geopolitics in the background. And the economic data itself was coming out pretty poor. Some of the earnings out of the US were poor. Just look at McDonald's, look at Netflix, look at Twitter. So all of these variables added together certainly doesn't bode for new highs. And as you can see in the US markets, we've made a new high in the Dow, new high in the Nasdaq. So problematic. Okay, problematic. So, but anyway, let's go back to technicals now and see exactly. Now that we know that the fundamentals are obviously indicating higher and creating this obviously short squeeze. As Mr. Art Cashin explains, I mean, it's a short-term short squeeze. Okay, so let's see exactly where these the markets are headed. Okay, so given the fact that the US markets have obviously looking at it from a comparison or comparative perspective. Okay, looking at it from a comparative perspective, basically what we have here, okay, if I'm looking at it from a comparative perspective, what we have here is that US markets have obviously made a new high. So the German DAX is a driver in Europe, okay, and the German DAX is dictated by the Nasdaq. Now the Nasdaq, as you can see on daily chart, has broke out to a new high. Forget the fib, 75%. I mean, look at this. You left gaps behind. So from my perspective, the reason why I was short last week and obviously ended up with negative, because I expected these gaps to be filled on the low downside. Given the fact that you've got the last taper coming in, and I wasn't aware, were you aware, that Mr. Kuroda was going to unleash this QE blitz and increases the pension fund purchasing power by almost more than 100%? Double it basically, okay, 25%. So I didn't have privy to that information. If I did have access to that information, if I was on the private email or this so-called a private email list that the Federal Reserve or central bank sent out to their so-called front runners, okay, to keep the market stable and avoid any panic and wild swings in the market, etc., etc. So basically, we didn't have, and you and me as a trader, we didn't have access to that information. If you were good enough, you could certainly read between the market, if you are going to be good enough. Now, I can't see from my Japanese yen chart. I mean, let's look at the Japanese yen. Did anyone even foresee a QE blitz? I mean, look at the daily chart. Okay, it's hit a double top. That's about it. Okay, it's come back. It's retraced and certainly into a 50 MA support, horizontal support, gap level support. I mean, who could have predicted the yen getting butchered like that? Okay, nobody could. Okay, unless you had inside information. Okay, unless you had inside information. Okay, yes, you could argue there was a gap fill here, but I mean, we've taken out, forget that gap fill, we made a new low. So I'm sorry, anybody who states that they actually saw the QE blitz coming, then other than inside information, I'd love to know what indicator they were looking at. Okay, I would absolutely love to know. And especially with new highs in the US markets, given earnings. I mean, yes, some earnings have been good, others have been circumspect, so certainly doesn't justify a new high. Okay, even though GDP data did come in obviously higher than expected, but other data that was coming in wasn't exactly spectacular and had everybody on the edge. So overall, I mean, I can sit here and argue until I go blue, but basically fundamentals were not justifying a new high in US markets, whichever way you try and explain it and justify it. Okay, so the S&P 500 obviously is lagging, but the Dow has certainly made a new high, and if you look at the as you can see there, and obviously the Nasdaq's made a new high, and so the S&P will eventually follow. Okay, so that's basically where we are because of the QE blitz. Okay, so USD JPY is currently around the 113 level, if I'm correct. USD JPY, yeah, USD JPY is still around the 113 level, so yeah, 112, 119. Okay, so let's see how this goes. Okay, folks, so going back to the markets. Okay, so going back to the European markets, given the fact that US markets have made new highs, European markets must follow. Okay, and given the fact that we did have some comment regarding from Schauble during the week, obviously because of the stagnation and the deflationary fears, and obviously in Europe it's lagging, etc., etc. China obviously is on the verge of slowdown, and so on and so forth. Obviously that's what's kept the European markets at bay, but that QE carrot still remains dangled. Okay, and Mr. Schauble will have some comments over the week, well, during the week last, I think Friday, and he was basically opening up to QE. So realistically, you're given the fact that the Nasdaq's made a new high, German DAX must play catch up. Okay, so first of all, if you look at the German DAX, because that dictates the sentiment and movement in the markets. Obviously, the weak data recently out of German DAX, but having said that, the unemployment data was stronger. Okay, so and given the fact that Asian markets dictate and US markets are higher, obviously Japanese Nikkei has blasted. I mean, 800 points in one night on Friday. So Thursday night obviously going Friday, so that will certainly push this market higher. So given the fact that the US markets are into new highs, okay, the German market I expect at least to hit the 200 MA and the fib 75% retracement, so I'm looking for that. Having said that, you do have an unfilled gap here. Okay, so watch out for that. 9,750, although that gap is closed. So that's the one that I'm going to watch out for, and obviously this downward sloping trend line on the daily chart. On the 60-minute chart, okay, you've got an inverted head and shoulders formation. The inverted head and shoulders target, as always, which I've explained for some time, was the head was around the 8850, so it was a 500-point target. So 92250 or 9250. Obviously, we've hit that and we've exceeded that, and this should certainly propel higher. I can't see it obviously slowing down for now. So 60-minute chart certainly remains bullish. Although obviously there is argument that we are hitting the upper level, and we'll see exactly what happens come Monday. Okay, but certainly needs to play catch up. Okay, Euro Stoxx 50. Let's go to the Euro Stoxx 50. That's another indices that I generally tend to follow. Okay, let's quickly go to our Euro Stoxx 50. Okay, daily chart. We need to close this gap here. So you're looking at 3140 and 200 MA 3150. That certainly needs to close. And don't be surprised if you go back and test these new highs at 3300. Any talk of QE, which more than likely, given the fact that the QE carrot is dangled, will always cause investors to push up and move this market higher. And it certainly needs to play catch up to the US and Asia. Okay, S&P Europe 350 again needs to move higher. You've got the first a resistance level here, 1390, and then obviously don't be surprised if we go back and test the 1400 plus level. Okay, obviously, like I said, it's all about playing catch up. Now the French CAC, given the fact that it's been depressed or suppressed given the German budget, or should I say the French and Italian budgets, etc. There's an unfilled gap here at the 50 MA, which is 4290. Watch out for that level, and obviously 200 MA certainly is not out of the equation, where previous support equals resistance. So watch out for this level here. Okay, 200 MA. So you're looking at 4300 plus, definitely from my perspective, and I'll certainly be going biased long on Europe going into next week. Okay, so I think that sort of sums it up from my perspective with regards to the European markets. Now there are these smaller time frames if you want to observe. I can certainly go and delve into that for you. You have the resistance level up here, where previous support equals resistance, and like I said, that gap at the 4450 level, we have an unfilled gap up there. So this certainly looks like it wants to propel high from my perspective. Minimum is 4350, 4450 is that gap fill, and obviously don't be surprised if we go back to 4500. The 4350 obviously equals the inverted head and shoulders target, so obviously I remain bullish with regards to that factor. The Euro Stoxx, see if I can give you an insight on the Euro Stoxx 50 in the smaller time frames, which again has an inverted head and shoulders formation. Target is 3180, obviously we've not reached that. There is an unfilled gap here at 3140, watch out for that. And there is an unfilled gap, actually that has been filled, but you do have horizontal resistance here in this region here. Okay, so this is what we're looking at there. Okay, so watch out for those levels there. Okay, and obviously previous support equal resistance there as well, again around 3170 levels. So from my perspective, inverted head and shoulders targets need to be hit on Euro Stoxx and the CAC, so obviously watch out for a move higher there. Okay, and obviously the German DAX should propel higher given the fact that it needs to play catch up to the Nasdaq. Okay, obviously given the fact that the biotechs already have broken out, which I've already explained with regards to US markets, and I've mentioned numerous times on Twitter, and obviously the semicons certainly need to play catch up as well. As you can see, biotech there obviously gapped higher, closed the gap, and looking to continue its rally. Okay, so the theme here is QE blitz sends global markets short squeezing higher, add in the fact that you've got obviously the QE carrot from Europe. Okay, and then add in the fact that the euro, okay, I did mention the euro, sorry, by the way, as well. The euro obviously has been clobbered, so that in itself going down to the 1.25 level, that obviously helps European exports, so that's an additional bonus for European indices. So that itself is a stimulus. Forget QE, that alone is QE, because what does QE do? It dilutes the currency and obviously helps the export market, and that's exactly what's happening. Okay, so given the fact that they've already started buying bonds to a certain extent, obviously given the fact that the second component is a currency devaluation, and that's more than likely one of the reasons why Mr. Draghi hasn't gone and or Germans have been opposed to it, because they already know that the end of the taper will obviously cause the euro destruction. Okay, because dollar appreciates, euro depreciates, and we all know what happens next. Okay, so that's another story, and that's another video. Okay, so basically the theme here, we continue the short squeeze higher, Europe needs to play catch up, and the QE blitz continues. So risk on, risk off, whack.